For a CNBC exclusive interview with our Pippa Stevens. Ken, it's great to see you. How can you have clarity through 2027? What about a recession?
Well, we continue to have volume growth in our business. I think even with a recession, the volume driven by electric vehicle growth. And then we're not really forecasting what pricing. That assumption through 47 is that pricing remains relatively flat.
Wow. So that's some decent, people looking for something stable. Prices have come up for quite some time, and now you see that playing out. Is the EV market, did it get too big during kind of the pandemic boom? Is it going to downsize, or do you think the gains are going to continue?
No, I think the market is growing. I think that transition is happening, and it's going to see growth consistently. It's at different levels in different parts of the world. Asia at one rate, North America, Europe slightly different, but every market is growing. It's just each one's at a slightly different place of adoption.
And in terms of as you look to benefit from the surge in prices, your targets released earlier today show that at the high end, you expect to more than triple output by the end of this decade. And given that we've seen so many challenges with projects of this nature, including around permitting, how are you confident that you can reach those high-end targets?
Yeah, well, we have multiple projects across that. So it's a portfolio. It's not one project that we're betting on. There's a portfolio there. And we may have some challenges in one, but we'll be able to deliver on another. So we think we get at least to the middle of the range and maybe to the upper end of the range because we've been executing projects like this around the world for a number of years.
Where is all the lithium going to come from to power all of the electric cars that are supposed to be sold over the next 5 or 6 years? And can industry like yours produce that lithium at a price that retains the economic viability of those electric vehicles?
Yeah, well, the big locations where the resource itself is coming from is Australia, South America, but we're starting to see resource come into North America. We have a facility in Kings Mountain where we hope to open a mine there in a couple of years. We actually produce today in Silver Peak, Nevada. So we have product from the U.S. We expect that to grow, but the big producers, Australia, South America, Argentina, Chile, but North America is coming into its own.
But I'm looking at the prices from January of 2020 to January of 2023, and the gains in prices, if I'm reading the chart right, are just astronomical. You cannot continue that kind of parabolic price rise and maintain economic viability, it would seem to me, for the demand for electric vehicles.
Yeah, that's right. But when you go back to the numbers you're looking at in 2020, that was a very bottom part of the cycle. And our forecast, as we'd said earlier, out to 2027 is that prices remain relatively flat from here. And that's an incentive price to encourage companies to invest for all the demand that's necessary.
We've seen this shift where OEMs are starting to contract directly with the upstream players versus, say, the cathode or battery makers. And do you think that as there's more concerns around a supply shortage, that we'll continue to see these types of new contract structures?
Yeah, I think there is concern about reliable supply throughout the cycle and all the investments that the OEMs are making. So you're starting to see, traditionally they allowed the supply chain to manage that, and they contracted really just the battery maker. The battery maker contracted with cathode and material suppliers. So you're starting to see battery players reach down to materials as well as OEMs. So I think you'll see a mix of that as different people have different views of supply going forward.
All right. Thank you very much. We appreciate it. Kent Masters, Pippa Stevens, thank you for being with us today.